What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see the indices climbing higher, but there's definitely a lot of warning signs that we need to pay close attention to. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, welcome to Septembear. Today we saw SPY going up 0.05% and we're still holding up above that resistance trendline breakout. So that trend line that used to be resistance is now holding up as support. So that will be a very useful support level to pay attention to on SPY. So right now on SPY, we are still bullish. Price action is still above all the moving averages, and we still do have the strong bull trend. We have support levels below at 451, 449, and 446. And if we start closing below 446, it will look like the market is starting to roll over. Don't forget about that gap to fill around 443.8. But don't expect that gap to fill until we start seeing a correction. Now to the upside, we definitely have resistance at 453, so I did add that level in. When you see the market rejecting at a resistance level like you do at 453, you need to pay very close attention. So on SPY, we need to see a breakout above 453 to see bullish price action yet again. As you can tell, we're sort of going sideways just below that resistance level, so that will be a very critical level that we need to break out above. To the downside, we do have critical support at 451, so we do have this very tight trading range that's only a $2 range between 451 and 453. So watch those two critical levels very closely and do understand if we break out above 453, it will look like we're running to our next price targets at 457 and 461. But for the time being, give the resistance at 453 the respect that it deserves. Jumping over to the NASDAQ 100 QQQs, we were up 0.17% today, and we definitely see some reasons that we need to start being cautious. Price action is still above all the moving averages, and we still do have the full bull trend, so we don't see anything breaking down in the price action or the trend at this time. However, yesterday we did form this candle that is called a hanging man candle, and today we did form a shooting star candle. Normally I don't look into candlestick patterns with too much weight because I don't think they're very reliable, but if you start seeing the triple Qs taking out this low at 378, that could tell you that maybe these candlesticks have some weight to them and we're going to start seeing some selling. So for that reason, I will say that the triple Qs level at 378 will be a critical support. If we start getting below 378, we still do have support at 376, and the most critical support on the triple Qs is still down here at 370. If the triple Qs close below 370, it will look like a stock market correction is starting to form. We still have the gap to fill at 368, but don't expect that gap to fill until we see a stock market correction. Now looking at the price action and the trend, we still are bullish in this market, so we still need to pay attention to our price target above at 388. Like I told you, don't get lost in the noise with candlestick patterns. Yes, they are looking bearish, but you can't put too much weight on just candlestick patterns. By far, it's way more important to pay attention to price action and trend. And right now, those are still bullish, so you need to remain objective as long as we do have bullish price action and we're above critical support. On the Dow Jones, we were down 0.1% today, and we did see the Dow closing just below the 5 EMA, but finding support above a positive sloping 20 sample moving average. So we're still above critical support, and we still do have the bull trend, but we are very close to breaking below the support level and losing the full bull trend. So the Dow Jones needs to start bouncing soon, or it is in jeopardy of losing the bullish trend, which is always going to be a warning sign. If price action closes below the critical support at 353, we could come to close the gap below at 351.7, and we do still have strong support at 351 and the 50 EMA at 350. Below the 50 EMA, the Dow Jones will look like it's rolling over and dying, so watch that support level closely. To the upside, we still have resistance at 355, 356.5, and 359. Jumping over to the Russell 2000, we could see we're up 0.67% today, and we did close just above that resistance level at 227. So that level could now act as support, and we could start to climb to the next resistance levels at 230 and 233. To the downside, look for that support level at 227 to potentially hold up, but we still do have strong support levels at 224 and 222. Below 222 and closing below our 20 simple moving average at 221, the Russell 2000 will look like it's coming back down to support at 219 or closing the gap at 216. So right now, the Russell 2000 is starting to look bullish, and we did get a bullish price action breakout, but remember what I always tell you with breakouts is look for that second day confirmation. One more day of the Russell 2000 closing above 227 will be a very bullish development. On the ARKK ETF, we were up 1.38% today, and we did break out and close above that resistance level right around 123. The next resistance level is just above, right around 125.6. And if we do break out above that level, the ARKK chart will be looking a lot more bullish. We do have the full bull trend in ARKK yet again, and if we can get another bullish price action breakout, that could tell us that ARKK is going higher. So look for that resistance breakout at 125.6, and above that you'll have resistance at 128 and 131. To the downside, look for support at 122 and 120, and remember that 120 is our critical support. Below 120, look for the gap fill at 116. On the VIX, we were down 2.37% today, but again, we do have another warning sign that we need to pay attention to on the VIX. If you've been following along with my VIX analysis, you knew that there was a gap down here at 15.7, and lo and behold, today we did fill that gap. Not only did we fill the gap in the VIX, but we did bounce off of that support trend line, which is now a higher low. So if we see the VIX bouncing off of this support level and going higher, that will be an extremely big warning sign you need to pay attention to, because a high VIX means that fear is entering the market, which tells us we could be expecting a pullback or even a stock market correction. So the levels I want you to pay attention to for a pullback are the VIX levels above 18.2 and potentially even getting above 20. A stock market correction, you're going to see the VIX getting above 23. So watch those levels and look to see if the VIX is spiking above them, because that will tell you to look out below. Now, if we see the VIX breaking down and closing below 15.6, that tells us the VIX is likely heading back down to about 14, and that will tell us to expect brand new all-time highs. So the analysis I'm giving you on the VIX is a very important warning sign you need to pay attention to, because if we bounce from here, that could be a very early sign that you need to get out of this market before things go from bad to worse. Remember that we're in the month of September, and this is typically a very volatile month. And if there's going to be a month that the market corrects and we see the VIX spiking, it could very well be September. And that's exactly why we're nicknaming this month Septembear. Jumping over to Bitcoin, we can see we're currently up over 2.4%, and the price action is back above all the moving averages. We held on to the full bull trend, and the price action is back above our critical support at 47,750. So watch that 20 simple moving average of support, because as long as we're above that and we have the full bull trend, it does look like Bitcoin can continue to go higher. We need to see Bitcoin breaking out above the price target at 51,000 to start running up to the 60,000s yet again. If Bitcoin breaks out above 51,000, I do think it can get to brand new all-time highs this year. So watch that level very closely. To the downside, watch that support level at 47K and 45K, and below that we have the 50 EMA just around 44K. On Amazon stock, we were up about 0.25% today, and intraday we did test that resistance trendline breakout level right around 35.30, and as you can tell, we did get rejected from that level. So Amazon is doing a great job at closing this gap above, but the gap doesn't fully close until we get to 35.80. We need to get that confirmation breakout above the trend line, so continue to watch that resistance around 35.30. Above that, we still have resistance at 35.52. And of course, the full gap close at 35.80. We also still have resistance at 3,500, so you need to watch that level as well. To the downside, there's two support levels I want you to pay attention to, and they're 3,400 and 33.91. Below 33.91, it could look like Amazon is coming all the way back down to the low 3,300s. On Tesla stock, we were down 0.22% today, and we see Tesla going nowhere today, still holding up above that support level at 732. So there's no more gaps to fill on Tesla, and we do have the benefit of the full bull trend, and we're currently sitting on support. So if we bounce off of the support level, look for a quick trip to the price target above at 765. If we break below support, you want to watch support levels at 714.5, our 20 simple moving average at 706, and below that our 50 EMA and support level right around 690. Overall, Tesla still looks bullish, but that doesn't mean we can't come back down and form another higher low. As long as we're forming higher highs and higher lows, Tesla is still in a bull market. On Apple stock, we were up 0.45% today, and we saw Apple getting very close to that price target at 156, getting all the way up to about 154.9 before seeing a pullback. Again, these Bollinger Bands need to expand to allow Apple to continue to go higher, because we're just seeing too much resistance from the price action getting too far extended above the upper Bollinger Band. So the price target on Apple is still 156 as long as we have the full bull trend. Look for support levels at 151, the support breakout level at 149.5, and the 20 simple moving average at 148.8. Below the 20 simple moving average, it'll look like we're breaking down and coming back down to the 50 EMA at 145, and below 145, we could close the gap at 137. But overall, Apple is still in a full bull trend and it still has bullish price action, so that should help try to keep the market going higher as long as Apple is remaining bullish. On the financial sector, we were down 0.57% today and we did close below the 20 simple moving average. So that's not bullish price action, but we still do have the bull trend. If we break down from here, look for support at the 50 EMA. On the industrial sector, we were down 0.34% today, closing just above our 20 simple moving average. We still do have the bullish trend on the industrials, but it does look like we could be rolling over. The healthcare sector was up 0.03% today, closing just above the 5 EMA and still holding on to the bull trend. Intraday, there was a lot of volatility and the price action was well below the 20 simple moving average. On the energy sector, we were down 1.47% today on increasing volume, and the price action is back below all the moving averages. We're back in the full bear trend, so the energy sector could be trying to go back into a bear market. So jumping back over to the S&P 500, we can definitely see that we're still in a bull market because we still do have bullish price action with a bullish trend. However, there's plenty of warning signs and we can see it in some of the sectors that they do look like they're trying to roll over. Also, watch that VIX because it does look like it could be getting ready for another round of volatility, and we are in the seasonality, one of the most bearish months of the year, going into the month of September. So be cautious at these levels and always remember the higher the stock market goes, the riskier it gets. Don't get greedy at these levels and make sure you're raising some cash and locking in some profits. If you see one of these critical support levels breaking down, the price action will always be your quickest indication that the market is starting to roll over. So follow the price action very closely and watch these support levels. Also remember that I have my own trade alert service that only trades TQQQs and it does very well in all market conditions, but exceptionally well in volatile markets. If September ends up being a volatile market, it could be the best time to try out bank trade alerts, and I'm currently running a 50% off promotion code for your first month. If you're interested in checking out bank trade alerts, you can find out all of the details and how to join in the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.